Hi, everybody. Welcome. 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 Tesla is down today 4.5%, drifting downward on low volume. Overall markets are also down. Dow Jones down 1%, S&P 500 down 1%, NASDAQ down 1.5%, Russell 2000 down 2%. Crude oil is down, gold is down, everybody's down today. Nvidia is down 2%. Huh, look at that. That never happens lately. Nvidia is down 2%. Everything is selling off. Is there anything up? Let's see. Apple is up 1%. Coca-Cola is up. Healthcare stocks, some of them are up. Visa, JP Morgan are flat. United Healthcare is down 9% due to some sort of investigation going on. Rivian is down 5% despite announcing gross profits. Yields are down 5, 6, 7 basis points, depending on where you look at the yield curve. Yeah, pretty much everything's down today. Consumer sentiment is down. I guess the only thing that's up is inflation expectations. Inflation expectations are up from 3.2% in January to 3.5% in February. These are long-run inflation expectations, which is a problem for the Fed. So the Fed is going to have a hard time cutting interest rates into inflation expectations rising, at least on the survey level. Any questions, comments? Please request to speak. Let's bring up Luce. Let's see if Chris wants to come up today or Steven wants to come up. Tesla turned into Tesla Q. Tesla Q Live. I should change the name of this space. Crazy times. We can go through a few data points today. I got about half hour to 45 minutes. Tesla is at the lowest level in a long time. 2 weeks. Lucha, how are you?
Hey, what's up, Yaman? All good.
Where do you think Tesla stock is headed next?
In my opinion, way lower, way lower. In the 100s, maybe even lower. Who knows?
Do you think it's going to go to 100s?
Yeah, 100%. I think that 1 year ago the fundamentals were way better. Like it has deteriorated a lot since then, and I don't see how the robotaxi hype can keep the stock.
Yeah. Chris, how are you? Do you think Tesla will triple this year?
Yeah, I think it's going to the moon, like probably 10,000 minimum. That's what Kathy Wood said, so it's definitely going to happen.
Oh, really? When did she say that?
No, I don't know what she said, but they do have like a sort of an open Zoom call coming up. I might join and ask her some questions.
Why do you hate your time? Why would someone join Kathy Wood's call? She's been wrong on so many levels.
Yeah, I don't know. I guess I have some appreciation for some of the work that they did 5 or 10 years ago. But yeah, she's been pretty wrong since on a lot of things. I mean, yeah, we don't even need to talk about that.
For what work do you have appreciation?
When I was when it was like 2018, 2019, they put out a lot of like research and graphics and stuff, basically promoting autonomous and electric vehicles. Not a lot.
Has any of it come true?
Um, well, it is true that Tesla produced millions and millions of cars profitably, but things have changed.
Hmm.
Yeah, it's funny to see Elon like revving his chainsaw and basically like doing anything other than work for Tesla. I would think that they would be trying to like get him to come back to Tesla and help. Like, do you think Tesla knows the precarious position they're in? Like, are they going to raise capital? Are they going to try to get Elon back? Like, I don't know.
If
I hope
Tesla
so.
did, if Tesla didn't raise capital at 400 plus, they're not going to raise capital at these prices. And yeah, I don't know. I don't know if Elon's ever going to come back to Tesla. TBD, I guess. He's not going to come back unless if he gets his compensation plan. That's for sure. And I think without Elon, Tesla goes down like Rivian. I mean, Tesla could go bankrupt without Elon. I think the probability of that happening is way more than people realize. Chris, what do you think the probability of that is? Tesla going bankrupt without Elon?
I've never even considered that as like a potential outcome, but I am now. Give me like a minute to think about this.
Okay. Steven, what do you think?
Ooh, I didn't have an answer. I had a question.
Okay, what's your question?
So on a day like today, Iman, where it's the volume right now is around 36 million shares, but it's down 5%. What do you make of that? It's not a sell-off, but it's still down 5%. So can you explain like what's going on a bigger picture type thing? Because I'm clueless with days like today.
I mean, trading is not my strength, so I wouldn't be able to answer your question. I'm sorry, but
Sorry.
I think I discussed in my pinned tweet why Tesla is worth less than $100 per share. So I don't really have any comments on short-term trading stuff. What did you do with your Palantir short? Did you cover it?
Yeah, no, I opened up a second position that day, and that one ended up doing pretty well. Also, I mean, I opened up a second position because I was hoping that it was going to continue to bleed into the after hours, and it did, and it was fun to watch.
Yeah. Chris, are you holding on to a Carvana short?
Yes, I'm holding on to my Carvana short. I actually didn't think it would drop this much this soon. I think it's really going to capitulate later this year. So yeah, I'm probably going to hold for at least a year, maybe two. My share price target is $10.
I don't know. I think there's something going on with markets. This is not a company-specific event. All high-flying stocks are plunging, including Tesla, Carvana, Axon, Palantir, Ionic, and many other stocks are. I think this might be the end here. So I think that we are. I mean, we also saw today services PMI contracting, and that might be the last shoe to fall. So this might be the recession starting finally.
I bought gold last night for the first time in like 5 years.
Okay.
Buying
Hey,
gold
Chris,
today.
so what's the answer to my question earlier, which was, what do you think is the probability of Tesla going bankrupt unless if Elon goes to back to CEO position?
Near zero. I think that with Elon as a 20% shareholder, he's gonna take a
He's
lot of
not a
action.
20% shareholder. He's not. He's 10% shareholder.
10% shareholder. Okay, so do you think if he dumps his shares, then
Look,
if he abandons Tesla,
here's
then
the
yeah,
reality. Here's the reality. Even if Tesla goes bankrupt, Elon would still be the world's richest man. So you think he gives a fuck? Steven?
My question was not related, so I kind of put my hand down. I didn't want to steer the topic away.
Okay. So if you're coming into this space today, wondering why Tesla stock is down 5%, then, and if you haven't read the article still on Seeking Alpha, you should. You can reach the Seeking Alpha article on my pinned tweet. It has been my most read, most popular article ever, and I've been writing on Seeking Alpha since 2016. So there are 3 reasons why the stock is dropping, and all of those are discussed. Why the stock is worth only about $100 per share, and all of those are discussed in the article.
Hey, Yaman, we cannot hear you.
Okay. How about now?
Yeah, it's sort of ironic that we're talking about Elon not doing his job while his product fails us.
Can you hear me now? Okay.
I can.
Steven? Yeah. Luce, maybe the problem is with you. All right. Chris, why do you think it's 0%? Steven, can you hear me?
Yeah, I can hear you.
Okay. What do you think is the probability of Tesla going bankrupt without Elon?
I mean, without knowing the financials like you guys do, I would say it's pretty high. It seems like, from what I remember, it was near bankruptcy before Elon came on and they started getting all these rebates. So, I mean, I think it's possible. Yeah, I mean, companies go bankrupt all the time. Hooters is filing Chapter 7 or Chapter 13 or Hooters is doing bankruptcy. So I mean, to say a company is totally immune to bankruptcy, I think is ridiculous. And then an EV company at that, I mean, EV things have it could be a fad. I'm just saying. So yeah, I think it is, but that's just me.
Steven, what else is on your radar?
Glad you asked that, sir. Actually, Pony AI. I think you've talked about it maybe once or twice.
Yeah, I don't know. I don't think I have. Pony AI.
It's actually up 25% today. The only reason is so it's another AI company and it does software similar to self-driving stuff like that. But anyway, my brother put me onto it a couple days ago. He opened up a small, just position in it. And that was at $18 a share. So I'm not sure why it's even up yet. 25%.
Well, there's a headline a few hours ago. Pony AI launches robotaxi service connecting Guangzhou to key hubs. Interesting. Chris?
Yeah, it's sort of ironic. We're talking about Elon not doing his job, and his product is failing us right now. I had to switch to my phone, but we're back, and yeah, I think there's just a lot of options for Tesla to pivot and be a substantially smaller, like leaner company. So I think they would figure out how to avoid bankruptcy. They have enough talent left.
Who?
That's a good question. I mean, I think Zach is still there. They got Lars is still there. I don't
Who
like
is
they.
there?
I think Lars
Who's
and
Zach?
Zach Kirkhorn.
Yeah,
Maybe
you
he
know he
left.
left. Zach, you know he left.
Okay.
Hey,
Well,
Chris, what are you doing? Are you just trolling? I mean, you can't just move yourself down to listen if you're going to troll.
answering your question.
Okay, I think you have bad connections too. All right, let's look at this Pony AI news. Pony AI launches paid robotaxi services in Guangzhou. Pony AI soars 27% on exclusive robotaxi monopoly in China, whatever that means. Pony AI just pulled off a major power move in China's autonomous driving space, and investors are taking notice. Let's see. Company is now the first and only approved operator for paid robotaxi services between Guangzhou city center and its busiest transit hubs, stepping in with fares set at standard taxi rates. This isn't just about launching a new service; it's about securing a strategic monopoly. Whatever. Okay. Becomes first robotaxi operations connecting Guangzhou city center to key transportation hubs. Our latest expansion in Guangzhou marks another major step in making autonomous mobility a part of everyday life. This co-founder and CEO said. Global leader achieving large-scale commercialization of autonomous mobility, founded in 2016, expanded its presence across China, Europe, East Asia, and Middle East. Steven?
Yeah, I was wondering if anyone could tell me why, like on this stock specifically, there's no options trading. It's not like, is it not on the S&P 500 or not on the U.S. stock market?
I don't know. Let's see. Pony AI stock. No, it's on the markets. It's on the market. I don't know why. It's on NASDAQ, listed on NASDAQ. It might be because of low volume, who knows? I don't know why it doesn't have options trading. I don't know anything about the company. It's only $7-8 billion. So that's after the recent rise. So before this, only a couple $1 billion company. So I don't know why there's no options trading. Good luck to you with your investment. Do you know anything about their technology, Steven? Never mind. Luce, what's on your mind? What's going on with Intel?
Well, many good news about Intel, and it's still a buy, in my opinion. Is there anything specific you would like to know, Jan? Because it's a very wide topic to speak generally about.
Well, the stock surged after you said buy. In 10 days, the stock went up about 50-60%. And in the last couple of days, it's down about 10%. So from the peak, in recent peak, I guess, local peak. $100 billion company, no earnings. I don't know. Intel stock surges on report of Broadcom, TSMC exploring stakes, potential deals with the chip maker that would split it into two. The Wall Street Journal reported late Saturday that Broadcom is considering making a bid for Intel's product business, which designs semiconductors for computers and servers. The journal, which cited people familiar with the matter, said TSMC has looked at controlling some of all of Intel's factories, potentially as part of an investor consortium. The companies have not submitted deals to Intel, and the talks are preliminary and informal, the journal wrote. Broadcom shares fell nearly 2% on Tuesday, while US-listed TSMC shares were down less than 1%. Intel's 16% gain Tuesday was its biggest, largest single-day jump since March 2020. Lucia?
All right. So I will try to make things simple. Right. So there is many rumors about Intel that are not really founded. Many of those rumors are Taiwanese propaganda. Taiwan and TSMC are in a very tight spot right now with Trump leading the USA and placing tariffs on semiconductors. And not only that, TSMC is facing high costs by itself that will make the producing with them less profitable. TSMC is way better than any other alternative because has been heavily subsidized by the Taiwanese government. But Trump is taking in account that as well, and tariffs are going to increase to such level to account for that as well. And so now Intel is really in a good position to capitalize on the tariffs that are going to be imposed. And it's also obviously also pushed by the Trump administration because of the geopolitical importance of having semiconductor manufacturing in the USA. Regarding those rumors specifically, there is absolutely, I think, zero chances of Intel selling the design part of the business, because that part is extremely profitable. The reason why people don't see earnings is because Intel is basically funding the foundries that are losing money. And they are doing so because they think foundries are the future. For example, Yaman, you see NVIDIA, you see AMD, all those fabless companies that basically have manufacturing from third parties. And as you say, Yaman, NVIDIA is overpriced, right? Everybody is making their own chips. DeepSeek is showing off that you may not need that much computing, or the return on investment is not there. And so the truth is that fabs are a bigger moat than any GPU or software going forward. And so for the fabs specifically, for the foundries, Intel has just really revealed many specifics about this new process node called 18A. And before, like 2-3 days ago, that there was a big conference about it, everybody thought that 18A might be lacking compared to N2, which is the next process node from TSMC. But what came out is not only that 18A it's comparable basically in every metric, but in many others is even better. And just one day ago, they announced that they are ready, like they are ready to go. Panther Lake, the new processors for laptops, the first product built on 18A, is releasing in the second half of this year, and will show off the capabilities of this new process node. And basically, to invest in Intel, this is the thing, all right? Either they can spin foundries positive, and Intel can become a $1 trillion company, or they could sell off Intel foundries if they are not able to do it, and basically get rid of all their debt and continue only as a designer, a chip designer. But even in that case, the stock price will double. So investing in Intel has a very small downside, right? Obviously, if you invest right now, you might consider that the stock might come down to $20 again. So you need to be prepared and do your due diligence. But investing in Intel, it's an incredible opportunity, specifically even more because now we have Trump as a president.
Okay. Well, I guess we'll see. We'll see. I see your argument. I see it. I think that's the logical argument. And I guess the assumption here is, though, that government protectionism leads to a valuable company. And I just don't know if that's true. I don't know if these companies today, Intel, Tesla, can compete or deserve their current valuations, or I guess in your case, Intel's forecasted valuation, potentially $1 trillion valuation, you're saying, just on US demand or Canada demand, US and Canada demand. So I think these companies, to become multi-trillion dollar companies, they're going to have to be globally competitive. And I don't think that's the case. I don't think Tesla is globally competitive today. And I don't know if Intel is going to become globally competitive, especially if they have the blanket of government protectionism, because that means they won't feel the fear of death. And if they don't feel the fear of death, I don't think they can become globally competitive. What do you think?
Well, Yaman, I think Intel has felt that fear, and that fear is represented in the stock price as well right now. I don't think really. I think in fact that Intel is now more than ever delivering. If you see all their latest products, Lunar Lake, which is let's say a low end, an entry level laptop CPUs are very good. Meteor Lake for laptops, their most recent CPUs are incredible, better than anything AMD has out. Their graphic cards, the Battle Mages graphic cards, are doing extremely well as well. Regarding the data centers CPUs, they finally closed the gaps with most of the AMD catalog and are being competitive there as well. The only thing Intel doesn't have right now are for AI data centers, the GPUs. And if they can enter that market as well, basically Intel is doing very, very well. So the point is that Intel is competitive and is profitable, but only in the design sector. And either they can spin the foundries positive as well and become like a possible $1 trillion company, or they must go on with only the design part. But even there, the stock price is still too low, even if that's the case.
Okay, I'll take a closer look at Intel and maybe write an article on Seeking Alpha, and then we can take it from there. Interesting. I appreciate your I think like one thing you have going for you, when you have an opinion, you're so confident of it, and you do a lot of work, and you have a lot of points to support it. So you have, I appreciate that about you, and so it's good. It's good to have conversations. Okay, let's see what else is new here. Markets are selling off. Dow Jones down 1.6%, and Nasdaq down 1.6%. S&P 500 down 1.4%. Russell 2000 down 2.6%. You know what's not selling off? Consumer defensive stocks like Coca-Cola, Pepsi, Apple, healthcare, and a few of the utilities. I mean, this is a recession market. This yields are down. This is a recession market. University of Michigan consumer sentiment, the final read for February came in at 64.7, expected 67.8, prior was 67.8, which was also extremely surprising to markets. So let's take a read of University of Michigan consumer sentiment report. These are February numbers. So I think the recession may have started. Lucia, what do you think?
I think it's possible. I think that Trump push to have everything in house and placing tariffs somehow has tweaked a balance that was in this obviously in the USA favors as well. I think there is going to be a repricing for sure, but I also think that there will be many companies that might in fact profit from this kind of market. And I will look at Intel, maybe Micron. I will look at those companies that are in fact protected by Trump. But
Okay.
I'm not sure.
Let's see. February 2025 updates for surveys of consumers, University of Michigan. Just keep in mind this is a survey. But one thing I like about University of Michigan data is that they come very early in. 1 second. Very early in the month. So let's read this. February 2025, current versus pre-pandemic long-run inflation expectations. This report updates the charts in current versus pre-pandemic long-run. Actually, hold on. Before that, I want to read this part. Consumer sentiment extended its early month decline, sliding nearly 10% from January. The decrease was unanimous across groups by age, income, and wealth. All 5 index components deteriorated this month, led by a 19% plunge in buying conditions for durables, in large part due to the fears that tariff-induced price increases are imminent. Expectations for personal finances and short-run economic outlook both declined almost 10% in February, while long-run economic outlook fell back about 6% to its lowest reading since November 2023. While sentiment fell for both Democrats and independents, it was unchanged for Republicans, reflecting continued disagreements on the consequences of new economic policies. Year-ahead inflation expectation jumped from 3.3% last month to 4.3% this month, the highest reading since November 2023, and marking 2 consecutive months of unusually large increases. The current reading is now well above the 2.3 to 3% range seen in the 2 years prior to the pandemic. Long-run inflation expectations rose over the course of the month and climbed from 3.2% January to 3.5% in February. This is the largest month-over-month increase since May 2021. For both short and long-run inflation expectations, this month's increases were widespread and seen across income and age groups. Inflation expectations rose this month for independents and Democrats and fell slightly for Republicans. Wild. This is really wild. I mean, this is the reason why the markets are falling. Because the Fed can't cut rates in this data. They can't cut rates in face of this data. There are some revisions to January data. There was a minor technical error in the generation of the weights used to complete aggregate estimates for January 2025. 1 second. I can't accept protected accounts. So Mina, you're gonna have to come back. We have since corrected the weights for that month. Overall, the differences between the estimates, original release, and revised are almost negligible, as seen in the comparisons below. Index of consumer sentiment, consumer expectations, current economic expectations, conditions, year-end inflation. Man, this is so crazy. It's so wild. Why inflation expectations are rising so much on the survey data. As of February 2025, long-run expectations have risen in recent months and are elevated relative to 2-year pre-pandemic, but remain below peak readings during the post-pandemic inflationary episode. They exhibit substantial uncertainty, particularly in light of policy changes under the new presidential administration. I honestly don't understand why some people think tariffs are not inflationary. I think they're clearly inflationary, but maybe I'm wrong. Who knows? Oh, Stephen Yutzi is here. Maybe Yutzi can explain to us why some people think tariffs are not inflationary. Yutzi, how are you?
Good. What's going on?
Do you think tariffs are inflationary or deflationary?
Inflationary.
Why do you think the markets are selling off today?
I don't know. I think it's tough to predict 1-day events. I'd probably, if you had to pinpoint me down to an answer, I'd probably say structural stuff. I think it's options expiration day today. There's been quite a few moves this last month in the market. So if there was going to be a big move, I'd expect it to be around OPEX.
Do you think Tesla is worth $100?
Yeah, I do. I think it's worth more than that. So I don't know if you're asking like more or less, but yeah, no, I think it's worth more than that.
Do you still own Tesla?
Yeah, yep.
Did you sell it at the top?
I overwrote calls 2 to 1. So for every 100 shares of Tesla that I owned, I wrote 2 calls. So some of them would have been naked then. But so that was good. I probably would have been better selling everything, but it substantially lowered my cost basis. So
Are you going to use the proceed to buy Tesla shares in the future?
maybe not right now, but we'll see. I mean, the premiums were absolutely wild in December. So
At what price would you be a buyer of Tesla shares?
in the twos somewhere. I have to think about it a little bit more, but not necessarily at these levels right now. And part of that's obviously like a personal decision too on just different personal financial situations. But so that answer could obviously change. But I'd say at this very moment, somewhere in the 200s.
So you don't think Tesla will drop below $200 per share?
Correct.
Coffee bet?
What's the time period?
What do you mean? I mean, if it doesn't drop this year, you think it's going to drop next year?
Well, I'm not ruling out that we could have like a severe recession or something like that at some point in the next 2 or 3 years, and the market would be irrational. I mean, I'd say probably in the next 12 months, I don't think it's going to drop below $200 a share.
Would you be willing to extend that into 18 months?
Sure. Yeah.
Okay. End of 26 then. Okay.
Sure. I'll give you 20 months, but yeah.
Okay, perfect. And while I type that up, Wave, would you like to add to the conversation?
Yeah, I had a question for Luce, and maybe one for you after you type things up. Luce, on Intel, what valuation do you put on Mobileye?
So Intel owns 88% of Mobileye, right? And
Right.
Mobileye is a public traded company, which is valued at 17 billions. And so, logically speaking, you would say, let's do 0.88 for 17 billions, and you get the valuation that the part of the company that Intel owns. Mobileye specifically, the fact that Mobileye as for Pony AI, like for autonomous driving, I really don't know what in 5 years the winners are gonna be. I have zero clue. But what I can say about Mobileye is that a company that has a solid balance sheet doesn't bring down Intel financials at all, and it's very well managed. I mean, they do their stuff and they are progressing in it, and so it's welcome for Intel.
Okay.
But give me a valuation, I have no clue.
Okay. You'd see I worded the bet with $700 billion. 700 Tesla less than $700 billion by 2026. So that's by the end of 2026. Okay.
That sounds off. Under market cap is 700 billion on $200 a share.
Oh, sorry, my bad. You're right. I thought it was 1.2 trillion right now, not 1.1 trillion. Give me 1 second. Let me fix that real quick. Luce, please continue. And then I want to talk to you about macro after that. Luce, please finish your thought on Intel. And Wade, if you have a follow-up question while I type stuff.
Thanks. I think the answer was good. I have the same at the moment, so it's not going to be a risk for Intel. As far as their CMOS fabs, have you looked into some of the work that's being done with finally after decades with photonics and repurposing CMOS and the work that Intel might be doing there in terms of advanced manufacturing?
So that's one of the problems, I think, with Intel. If you really want to understand Intel, you cannot look only at the financials. You cannot only look at the geopolitics. To really understand Intel, you must have a very high level of knowledge regarding this tech. And honestly, I have to say that I try to learn as much as I can. But when it comes to those specifics, it's so hard that maybe there are not many experts that can truly fully understand technologically what Intel and so on are doing. But what I can say is that Intel is executing extremely well and is really pushing for leadership in many, many sectors. And as of right now, I think Intel is doing very well, and in general speaking, technologically wise. But specifically for what you asked for, I honestly have to say, ask to an expert. I cannot go into those minute details.
Thanks.
Okay, thank you. Yutsi, let's talk some macro. Today, University of Michigan consumer survey data showed inflation expectations surged, fastest pace since May 2021. This happened now 2 months in a row. Do you think inflation is coming back?
I think it's going to remain sticky. And I've kind of held the same belief since the Fed had its mission accomplished press conference. I want to say December of 2023, when they're kind of starting to forecast that there's going to be significant cuts in 2024. And I think at the beginning of last year, they're forecasting like 6 rate cuts, and the economy got really bullish, and people were getting really optimistic about that. And as you pointed out, tariffs and deglobalization is inflationary in nature. So I think as it's not just the United States, it's countries all around the world that are kind of becoming more protectionist in nature versus kind of the trend of the last 20 or 30 years. So I think all that stuff puts upward pressure on inflation. And I believe the Fed will probably have to hold rates where they're at longer than what people expect. Although I think current expectations are that they'll hold rates steady through the end of the year.
Well, that had changed actually. I think yesterday. Let me see what the current one is. But I think yesterday people started expecting a rate cut by June again. So, um, so why? So you're confident that they won't have to raise rates? Is that right?
No, I wouldn't say that I'm confident they won't have to. I think that um, if I were them, I'd put that option back on the table. I don't know why they ever eliminated that
Yeah.
option.
So right now, the probability of a rate cut by May is 33%. By June, it's 60%.
I think the risks to the upside right now are more than the risks to the downside, and that's why I think the Fed they kind of put themselves in a box when they kind of said we're done hiking this cycle, and instead they need to take a more balanced approach and say I wish they would have said something along the lines of, yeah, we've cut the last 2 meetings, but that doesn't necessarily mean that we won't adjust meeting by meeting, and if the data suggests that inflation is picking back up, we won't hesitate to raise rates again or something like that. I'm sure the market won't like that news, but it would help get inflation in check. And I'd take a coffee bet with anybody that thinks that the Fed is going to achieve their target of 2% core PCE for 2025. And we're currently in February.
I think the market is starting to price in a bit of a recession probability. What do you think is the recession probability starting this year?
15%.
Is that higher than what we discussed?
No,
I think we have a bet on that, right?
yeah, same price. If I said anything different, I think it was within a couple percent. I think I was always saying somewhere between 10 and 15% this year, and I don't think you can go much lower than 10 or 15% just because life happens. So I would never say zero, but I don't. It's not any elevated than it would be any other traditional year.
Okay. We have one of our latest bets right now. Thank you for the updates. One of our latest bets right now is that home prices will drop more than 3% in 2025. We've seen inventory levels rising, price cuts rising. Do you still think that they're going to be about flat this year, home prices?
Yeah, and in the middle of January, it looked like inventory was starting to rise very early in the year, and there have been a couple flat weeks. Inventory, I think, grew this last week according to Altos data, but the 2 weeks prior to that, inventory fell. So at one point, I thought there was starting to become a pretty good likelihood that prices would fall, but inventory hasn't been surging. New listings hasn't been surging either. So I don't expect. I mean, prices could fall slightly, but I still am in the -2% to +2% home price growth this year.
Okay. Well, I think you did win our previous home price. I expected more than 10% drop by May 2025, and that doesn't look like it's going to happen. So that was a May 2024 bet for May 2025, and I came around a little bit to your view, and we bet more than 3% drop this time for 2025. So December 2024 to December 2025. But yeah, I don't know. Even your boy, what's his face? What's his name again?
Mike Simonson.
Yeah, Mike Simonson is starting to sound a lot more cautious lately.
Yeah, I mean, I think he's adjusting as new to data comes in. One of the reasons that I'm somewhat bullish on housing and that I don't expect like -5% or -10% outside of a large macroeconomic event is because I believe that there's still a lot of demand um, that's just sitting on the sidelines, people that are waiting to buy houses and stuff as interest rates drop. So I think if interest rates drop to, let's say, 6% or even 5.5% as potentially economy weakened, I think housing and other sectors that are more interest rate sensitive would be there to support the market. And that kind of ties in with my belief of why I don't think there's going to be a recession, is because as the market starts to front run that, I think you'll kind of naturally get equilibrium. So I was with all the plane. This is somewhat of a tangent, but with all the plane stuff that's happened recently, I've been watching more like plane YouTube videos and things like that from pilots, and they talk about how in airplanes there's this natural phenomenon where planes want to fly level. So if they're like starting to dip, they'll speed up and accelerate to reach back to normal level flight, and the same in the opposite direction. If they're going too high up in the air, they'll lose speed and they'll start to dip. It's called like poigent or something like that is the official term for it. And I feel like that's very similar to what the economy is doing right now.
Okay. Seeing what would worry you that the recession, and maybe you're wrong on your recession call for 2025.
If I saw weekly unemployment claims start to rise materially, so let's say like higher, like 50 or 75,000 claims higher than like the previous 4 week average that we're in right now.
Yeah, so 300,000 plus, you're saying.
Yeah, absolutely, right in that range. And I think we'd start seeing it like if it really started to jump some weeks. Like I think that would worry me. Payroll data that Bill tweets out, like that data continues to come in a few percent over the previous year. If we saw, I mean, I think that would be more of a lagging indicator. But if somehow that was, I don't think that's a preceding one. But if it was, seeing any of that data start to soften would concern me. So.
So there are a lot of people who have their 401ks in target date funds. What sort of allocation would you recommend somebody today? Like, let's say one of your friends, let's say their age about the same as you are, and average income, risk tolerance level, etc. What level of equity versus bond allocation would you recommend to them today?
I'd recommend anybody. I don't give financial advice, so anybody that would ask me what they would do, I'd recommend what kind of is the popular belief that is pick a target date fund that'll automatically adjust stocks and bonds according to age. So if you're in your 20s, probably a 80+% allocation to stocks, and then as you approach retirement, an ever increasing amount of bonds allocated in your portfolio.
Okay. Okay. Well, I mean, you obviously make a lot of sense. So how come you're not worried about today's S&P Global US Services PMI being less than 50?
Isn't that one of the metrics that equilibrium is actually not 50, it's like 40 or what?
No, I think I think 50 is the equilibrium for this one.
I guess it just more broadly, I think there's a lot of demand in the economy that's sitting on the sidelines waiting for rates to drop. And so I think if the Fed had to cut rates aggressively, which sometimes can be a bearish sign because it means that that demand is falling faster than what like people are expecting, and so then usually that causes job loss and kind of your typical recession cycle. But I think there is a lot of demand from businesses, consumers, things like that that would be spurred if interest rates dropped 1 to 2%.
Yeah, that's very interesting. Very interesting.
So I guess
Um,
maybe to expand on that a little bit, it's like if you just have all this demand that's just kind of waiting to come in, like I kind of believe that there's somewhat almost a floor to prices. And that's kind of why I believe that inflation is going to continue to be sticky, because if suddenly you have all this demand that's waiting on the sidelines as rates drop, um, you'll see a spike in activity. And some of the Altos data, if you look really carefully at some of the weeks, um, I want to say it was fall of 23, I think, when the rates dropped by 1 or 1.5%, you can almost immediately see a spike in housing activity, and by almost immediately, I mean like on a 2 to 4 week basis.
okay, I'm taking notes. Demand is waiting on the sidelines, and we could see a material pickup in demand if rates drop 1%. So
One to
if
2%. Yeah.
okay, so if mortgage rates drop to 5 handle, then housing activity would, did you say surge or increase? What was the word you used?
It would pick up, and I like to help clarify this nuance take a little bit. I think I won't be surprised if there's different parts of the economy that get weak over the coming year. So I think in a traditional balanced economy, you have parts of the economy that are doing well, parts that aren't doing so well. I mean, if every single part of the economy is doing really, really well, usually you have high GDP growth or high inflation, or sometimes both. And so I wouldn't be surprised if there's some weakness in different parts of the economy that kind of get picked up by housing and some of the other interest rate sensitive markets as rates drop.
Okay, what about vehicles? So right now, the let's kind of transition to Tesla a little bit. So new car loan rates are about 9 handle right now, and you're saying if they drop below 8%, 8%, then we should see a significant pickup in vehicle purchases. Is that right?
I don't think new rates at most dealerships that you go to are 9%, but um, I agree with the overall premise that as rates come down, vehicle sales should do well. But I think vehicle sales somewhat are doing like they did decent last year. I mean, I know Tesla didn't, and I know the whole electric vehicle market has kind of struggled for 12 or 18 months. But um, I don't think that's necessarily just because of the economy. I think it's bigger than that. Because if that was the case, then um, why did all these other companies that sell gas vehicles do so well last year? So I think the electric vehicle Tesla discussion and debate is uh, you could attribute some to macro headwinds, but I wouldn't say that's maybe even the
Yeah.
majority of it.
Well, just to kind of correct what I'm saying. So DGM in the reply says rates are 6.5% right now, and you said it's a little lower than 8 or 9. But what I was referring to is average new car loan rates. And what you guys are talking about is kind of like an excellent credit new car rate. So I think the average matters more in my mind than what an excellent credit person holds. So gets. Yeah, I don't know. Because the fact is, a lot of new car companies, including Tesla, have been offering 0% rates. A lot of home builders are offering 5-6% rates. I can make the argument that on the new construction front, home builder front, maybe it matters less because 80-90% of the market is existing homes. But on cars, about 1/3 of the market is new cars. So I think even if rates drop 1%, it may not be that beneficial for new car purchases. But I can see it being beneficial for home purchases unless the economy goes into a recession. So we're back to the recession conversation then. What do you think?
Yeah, I just pulled up U.S. light vehicle sales from Calculated Risk, and although they were down in January of 2025, if we look at the last 2 or 3 months of 2024, that was the best 3 month stretch since one small bump in 21. But other than that, that's almost back to 2019 levels of new car sales. So yeah, it kind of reiterates my point that new car sales did I mean, honestly, pretty well last year.
Yeah. So then what do you think about Ford management, GM management pointing to shaky waters for 2025? What do you think they're missing?
I think your point of some that, and this is maybe an old, I guess I don't want to put words in your mouth, but I think there will be some market consolidation of auto manufacturers, especially with some of this debt that they have having to be refinanced at a lot higher rates. And that's going to be kind of one of the negative trends that I watch for this year is I think there's a lot of debt that was financed, let's say 3 to 5 years out during 2020 through like kind of 2021 or 2022, that was financed at super low rates. And eventually that debt is going to have to be rolled. And if some of that debt was, and you maybe understand this a little bit better than I do, but I think some of that debt was financed for 3, 5, 7 year terms. And as some of that stuff has to be renewed, the cost to service that debt is going to be a lot higher, especially if the Fed doesn't plan on dropping rates anytime soon. So I think that'll potentially cause some consolidation in the auto market. I think you're seeing some insane competition from different like from all brands now, that kind of days on market and inventory and stuff has kind of returned back to normal. I think vehicles are a little bit further along than what housing is. It just takes a long time for housing inventory and stuff to normalize. But that trend we saw normalized in vehicles in the last 12 or 18 months. And as a result, I think there's a lot of competition in the vehicle market. And I think as a result, you'll see some consolidation from companies like potentially Nissan going out of business.
Yeah, I mean, there's no question that a lot of these companies are going to go out of business. Nissan, Rivian, hundreds of vehicle manufacturers in China, and many others as well.
And I mean, think about that trend. If you have a company like Nissan that's about to go out of business, like they're going to pull out all the stops they can to move vehicles, especially as you've pointed out many times before, the fixed cost absorption economics that auto manufacturers have. So if auto manufacturers need to keep moving vehicles to maintain certain levels of profitability, suddenly when those trends potentially reverse, and obviously you've made that argument against Tesla more recently, it could be a more troubling sign. And I think that's why some of the auto CEOs are kind of talking about shaky waters, because they see companies that are kind of pulling out all the stops they can to move vehicles.
I mean, the delinquency rates are also going up, especially in the automotive car loan market. A lot of people bought vehicles in 2022, 2021, when prices were above $50,000 on average. Tesla prices were $60,000, $70,000, and those vehicles are now worth about $20,000, $30,000 just 2 years later. So that's the problem for new car market. So I just don't know how much demand is going to be unlocked if rates drop just 1%. I don't see that happening. I guess that's an area where we disagree wildly here.
Yeah, and I think your point about the how underwater some of these loans are, I think that was my argument for the kind of the last 18 months. I think as people pay down those loans that they took out, I mean, I think the peak of vehicle pricing was like 2022 sometime. So now that people maybe are 3 years into their loan, they should gradually become less and less underwater, because the depreciation curve should flatten out versus kind of what the payment curve would look like. So I think that's definitely been a hindrance to vehicle sales over the last 12, 18 months.
Yeah. Okay. Well, there's one more thing Tesla specific. So let's speak company specific right now. Tesla is facing intense competition from BYD and Chinese automakers. BYD is producing profits, more profits than Tesla is. BYD is now throwing in LiDAR and ADAS systems, level 3 systems for free on millions of vehicles. BYD is gaining market share versus Tesla and also now in other markets. And even energy. In energy, BYD is growing in China and elsewhere. So even if rates come down, what does that say about Tesla's sales and profits if they're losing market share to BYD and other Chinese automakers?
I don't necessarily have super strong feelings related to like Tesla China share. I don't know how much is attributed to some of the active safety features and stuff that you mentioned. I think part of it is because they need to expand their vehicle lineup some. I just don't know how many Model 3s and Model Ys can be sold globally. I think people want different vehicle options and stuff. When you think about a traditional manufacturer, they have kind of everything from the small sedan all the way up to the large SUV. And so I think one of the wildcard opportunities that would be bullish for Tesla would be if they're able to produce a larger vehicle that could maybe hold even a few of Elon's kids that he has in like some sort of 7-seat suburban or larger vehicle. So, but I think you're right. I mean, competition in China is intense, but I know a lot of those manufacturers aren't profitable either. So I would expect a consolidation there too, which could potentially benefit both BYD and Tesla.
Okay. Is there anything else you want to talk about on the macro front?
I'm curious about Rivian. So to kind of reiterate my feelings on Tesla, I think Rivian faces a lot of similar headwinds as what Tesla does. And in their guidance last night, they guided to uh, flat to even down vehicle sales this year. I think it's kind of flat in best case scenario, but it's basically they're already talking about how vehicle sales are they're kind of planning on a decline next year, this year in fiscal year 2025. So I think Rivian kind of points to how hard not just the auto market is, but the EV market is specifically.
I mean, I think Rivian is a case on its own. Revenue $5 billion, operating income -$5 billion, and that 2-to-1 ratio of expenses versus ASP just hasn't changed for years for the company, and the market has waken up to the situation 2 years ago when Rivian started trading at cash, and ever since they've been trading at cash. So, the company's going bankrupt, no question about it, despite all the noise from Rivian bulls, and it's just a matter of time.
What do you say to the Rivian bull? And I'm not a Rivian bull or bear. I guess I'm pretty neutral on the company. What do you say to the Rivian bulls that point out that although they aren't net profitable yet, they did achieve gross margin positivity this last quarter?
I say go fuck yourself. What am I supposed to say? They're just morons. What do you say to morons?
Do you think there's any scenario where they could continue to get funding from outside companies? Because if they're not, like the counter argument would be if they're not gross margin, like if they're at least gross margin neutral, how much cash would they continue to have to raise every year to stay afloat? I assume it'd be a couple $1 billion of cash that would be needed to continue to run operations every year. And who knows what the capital markets are like? Maybe they're supportive of companies that might compete against Elon.
I mean, I hope they keep raising money from Volkswagen so they can keep they can take Volkswagen down with them. But Rivian is evidence that we need recessions. Because without companies like Rivian going bankrupt, people who are deranged are going to continue to buy the stock or give them money. So, I guess you need recession cycles. Like, I think I'm kind of starting to see why recessions happen because we can get rid of recessions, but I think recessions are necessary.
Yeah, I mean, I think one of the terms and phrases I've heard is that it helps adjust misaligned capital, basically. And so if there's a lot of misaligned capital, which I think there has been, and COVID and all the stimulus and stuff kind of masked a lot of the misallocated capital in the last 10 years or so. I think I agree that recessions aren't necessarily good. You don't hope for them, but they do help clean up companies, and the companies that do survive them usually come out stronger.
Yeah, it's kind of like a forest fire. A forest fire takes away weaker trees, and then the stronger trees can get stronger. But in the meantime, I can definitely see Tesla stock going through what Amazon stock did back in early 2000s, drop 90%, but still survive. And I can definitely see that happening with Tesla stock. What do you think?
Yeah, I had a question on, and this is perfect for your line in financial analysis. If there is a company like Rivian that, let's say, they're able to get gross margin, let's just say neutral, they have to fund obviously all operating expenses. Where does an R&D would be part of that, but how does like CapEx and other stuff come into play? Because don't you still have to like funnel some of that through your operating line? But can you talk about how like growth plans and things like that, how that would be affected if there's a company that's just gross margin neutral, but they still have to fund like operating expenses and stuff?
Sorry, I don't quite understand the question. Can you?
So, so Rivian needs to expand and build factories and stuff. Is the capex line item that's not included in operating expenses, is it? Besides just the depreciation of the good that they build, like the factory that they build, for example, if they build the factory in Atlanta or in Georgia, for example.
Yeah, depreciation is mostly in COGS, and but you still need accountants, lawyers, your CEO, your executive team. You have R&D expenses if you're trying to expand into new lines. Like it's not like no company has 100% operating leverage. You know, so I mean, let's assume for a second that they solve they solve, like, let's assume Rivian solves um, unit level profitability, just overnight, which obviously isn't going to happen. But let's say they did that, they still need investment into operating expenses to get to bottom line profitability. So um, they don't have a chance. They just don't, like, 0% probability, and that's what the market prices to.
Sure. Were you surprised by their large free cash flow number yesterday?
I didn't see. Did they have free cash flow? I didn't look. I honestly didn't look at Rivian's
Oh,
financials.
yeah, they had like $850 million of positive free cash flow. Obviously, some of that was because of deliveries were higher than production, so that helped quite a bit. But I thought that was even higher than what I didn't necessarily have a strong expectation on free cash flow, but I didn't think it'd be that high.
Yeah, I can take a look at it real quick while the machine comes up to speaker board. Anything else you want to talk about on macro?
Last thing was that I think I did say that the guy I followed, Jem, said in January, he wasn't predicting it, but he thought there was a scenario where China performs really well in the start of the year. And I think Chinese large cap stocks are up 20% year to date. So,
Yeah. Are you buying any Chinese stocks?
not right now, no.
Okay.
Although maybe Machine will tell us what his calls or what his wheel strategy is on these triple levered funds that he's buying and selling.
Consolidated statement of cash flows for Rivian, year ended 2024. Net cash used in operating activities negative 1.7 billion. What are you talking about?
I'm talking just for the quarter.
Do they show quarter? Cash flow quarter. Machine, how are you? Wow, Machine? Machine, you have to unmute yourself. I know you're new in spaces. You might be having some sort of technical issues desktop. Okay, liquidity and free cash flow. My mic isn't working, he says. Couldn't figure it out. Let's see. Results in positive free cash flow of 856 million for the fourth quarter of 2024. Okay. And then they point to some sort of a, let's see, net cash used in operating activities, $1.2 billion of positive. But they don't have a breakdown of it. What the fuck? That is so weird. So we don't see what the net cash used and provided by operating activities is, because they don't break it down.
It just says
that
one
is
point.
so weird. That's
It-
so weird.
It says like almost 1.2 billion of net cash provided by operating activities last quarter.
Yeah, and they don't show the breakdown. That is so fucking weird.
What would you expect to see within that?
I have no idea. I would look at the working capital. What changed there? Let me see. What was the difference between production and deliveries in Q4?
1,500 vehicles. They produced 12,727, and they delivered 14,183. So yeah, 1,456 vehicles more delivered than produced.
I mean, that's only. Yeah, I mean that's not very many, right? So that's not the reason, then, right?
Yeah, that only gives me, if they had like an ASP of like 7 or 80,000, that only give me like 130, 140 million dollars, like best case scenario of
Yeah.
additional cash. So that's why I just saw that number and I was like, well, that's higher than I would expect based on these numbers.
Okay, I can take a closer look. Let me see. We would have to pull up their balance sheet in Q3 and Q4, so I can do that real quick. Let's see if machine figured it out. Is mic issue. Anything else you want to talk about on macro? You'd see. I don't know. I think you might be underestimating the inflation risk here. Reaccelerating inflation risk.
Yeah, no, you think I'm underestimating that? I feel like that I've communicated that I think that is a risk.
But you said the Fed won't have to raise rates.
I don't think they will. I guess I'm communicating between what I think they should do and what they are doing. I don't think they will, but we'll see.
Because the manufacturing PMI also showed prices paid increased, right? So there's now a few things that are kind of pointing to reaccelerating inflation. It's not just one thing anymore. It's not just survey-based inflation expectations. It's also manufacturing prices paid. It's also, you're seeing some inflation expectations, inflation increasing in UK as well. You already kind of, wages are still a little high. So yeah, I don't know. I don't know if the risk of a rate hike is 0%. What do you think is the probability of the next move in rates being a hike?
20% probably. I'd say
Okay.
it's.
Okay.
I mean, the 10-year move has moved pretty dramatically in the last like 2 or 3 days. We're back almost under 4.4 again.
Yeah. I mean, I agree. It's around 20%. I don't think it's likely, but I agree that it's more than 10%. Okay. I mean, it looks like machine couldn't figure it out. His microphone. So
I guess last macro thing, and this is like really stock related. I think the next 10% move in stocks, like for the S&P and the Nasdaq's up, not down.
sorry, say that last part.
I think the next 10% move in the stock market is higher, not lower. I
Okay.
think the last thing I mentioned this maybe a week or a couple weeks ago when I was last on, that I thought there seemed to be a lot of people that were very well hedged and were very worried about kind of the macro environment. And I think it's hard to have a big meaningful move to the downside when kind of everybody's positioned for it. So I think more people would be surprised by the next 10% move in the market being higher than lower.
Okay, cool. Where do you see that data that more people are positioned for a recession?
There's that sentiment survey that comes out every week, every Wednesday, I believe. It's what was it, NAIMM market sentiment survey. I think it's a survey of like hedge funds and people that put like money to use. And I want to say I saw a tweet. Let me see if I can pull it up. I thought there was a tweet that said it's been below 30% for 3 weeks in a row. And the last time, on average, when it's 3 weeks in a row below 30%, the market's been like more than 10% below its all-time highs. Let me try to see if I can find it.
Yeah, no, I know what you're saying. The thing is though, like that data you're talking about, like the sentiment positioning data, is so wildly different depending on the source. So I also saw, for example, the cash balances in portfolios today is like the lowest since like 2019. You know what I mean?
Yeah, here it is. It says it's from Ryan Dietrich. I said 137 times the AAII sentiment survey had at least 40% bears for 3 weeks or more in a row. The S&P was down on average 18.4% from peak during those times. This is the first week in history that it was making new all-time highs when the survey had 3 weeks in a row of 40% or more bears.
Okay. Can you send that to macro analyst when you get a chance? I'll take a deeper look at it. Okay, so here is the balance sheet comparison. You know, the thing about being good at accounting, you can actually build a cash flow statement if you have enough data, and we do have enough data. Even though they don't want to show it, I can build a cash flow statement from scratch for Rivian. It's so fucked up that they didn't publish there, and they said we have 1 point something billion operating cash flow. That's so fucking
Do you
weird.
think that's something that would be posted in like the 10Q?
No, they don't have to do it, but it's good practice to do it. I don't know if they publish. You mean the 10K, right?
Well, yeah, correct, because it's the end of the year.
Right. So I'm guessing they didn't do it on the like you definitely don't have to do it in the SEC filing, especially for cash flow. You don't have to do it. And but the fact that they didn't do it and they still put that line in there, it's so shady. Anyway, this company is not a good company, man. I'm telling you, that guy is not a good guy. So let's see. So if I look at AR, so AR increased $200 million. Inventory decreased $400 million. So there's a bit of a boost there. So your inventory decreased $400 million. Okay. I'm guessing it's AP, but let me just see. No, it's not. AP decreased 100 million, and accrued liabilities are decreased $50 million. So it's not that. So they didn't extend their payables. Oh, there you go. Current portion of lease liabilities and other current liabilities jumped $500 million. So that's part of it. Okay. So total current liabilities increased by $320 million. So that's part of the operating cash flow they're talking about. And then current assets increased 0.7. But that's because of cash, short-term investments. So it's not that. So their working capital definitely benefited them a little bit, but that doesn't explain the full extent of the operating cash flow increase. Yeah, this is a head scratcher. What do you think is happening here?
I have no idea. I know. I mean, this is like kind of your bread and butter, right? So I was like, let me ask
Yeah,
them why. I didn't know. I thought I'd read somewhere that VW might already be injecting cash into Rivian for like
but that wouldn't be
software, or okay, that wouldn't be where that shows up then.
VW injecting cash for software. Let's see. Hold on 1 second. PP&E is about the same, increase of $200 million, but that would be in capex. And then other non-current assets increased $240 million. Other non-current assets. I mean, I guess that would depend on the nature of the non-current asset. Yeah, this is a head scratcher.
So I mean, it's my understanding that they booked like $299 million of regulatory credits in the quarter, but in my head, that still didn't like that would show up in the traditional revenue and like that would show up in revenue. So you could take that minus COGS and
Right.
just go from work from there. But
Right.
so yeah, I don't know.
Yeah. Yeah, this is quite interesting.
Because in my head, I saw not that free cash flow can just jump so much from quarter to quarter. Like you could have a great operating margin quarter, but still have like terrible free cash flow because of all sorts of weird factors. But in my head, I'm like, well, if they're able to print that much operating income on a even somewhat irregular quarterly basis,
Operating
it
cash
wouldn't.
flow.
Correct, free cash flow. It wouldn't take very much for them to survive. Like they wouldn't be burning that much cash on a year-to-year basis if they are even able to keep those numbers somewhat in line. Like if they're able to, let's say, like next quarter, it's minus 300 million, and the quarter after it's like up 400. Like on a free cash flow basis, they might be pretty close to flat.
I have to think about this one.
And I guess the last comment that I was going to make is it seems like Rivian is just trying to buy time, and that the longer that they're around, the higher the likelihood that they would be potentially able to get another vehicle ramped up. Not that it's true, but if they have all the R&D done for, let's say, their kind of next generation vehicles, I think it'd be a lot easier for them to go to capital markets and say, "Hey, we have everything done and ready to build. We just need to raise a couple $1 billion to
Let me
get
ask you
this product
something. So,
launched."
how do you explain inventory dropping $432 million in one quarter? If the vehicle deliveries and production is only 1,500, how do you explain inventory dropping $432 million
For a quarter, or was that a year that you're looking
for
at?
the quarter?
Would any of that have to do with like write down in inventory where they're not using some of the old equipment anymore, or like the LC
Well,
NRV?
the equipment would be in PP&E, so that wouldn't be inventory. It could be their raw materials or work in progress dropped. It could be some inventory write down. You're right.
The write downs were only 66 million for the quarter.
Yeah, exactly. So then it's not that. So I think that explains a lot of the operating cash flow, but not all of it. So hold on one second. Let me just see. I mean, obviously the credit sales are part of it, right? Because that's in the net income. Yeah, this is a really weird one, but I can't figure this out. I mean, it's just math. I can't figure it out. It's just have to take the time to it. And I don't know if I want to do it while live here and use up Tesla Live space for it. But let me just see. Net loss 743 million. So that's our starting point.
I'm just reading some Rivian headlines. It says they closed joint venture with Volkswagen Group and loan from Department of Energy, which provides up to $10 billion of incremental capital. Would any of that show up in like debt or no? That wouldn't explain the operating cash flow though. That'd be financing activity.
Deferred revenue of $1.6 billion in the year ended December 31, 2024 cash flow statement. Deferred revenue up $1.6 billion. So let's see what that was in the Q3. So that could be it, Stephen. If Volkswagen's putting cash and they're calling it deferred revenue, that could be operating cash flow. So that's probably what it is. Make sense?
Yep. Yeah, that's what I just found. Somebody else said the exact same thing. Said
Yeah.
1.619 million of deferred revenue,
Right.
and that basically didn't exist. It was 149 million at the end of last year. So you have a
Right.
$1.5 million increase in deferred revenue. So that must be how Volkswagen is injecting cash into the business then.
Yeah.
As but then that means that it should eventually flow through the revenue line. So we could potentially expect to see a boost to revenue in subsequent quarters that maybe wouldn't match or align with vehicle deliveries.
Yeah. But obviously, for the survivability of the company, that's going to have some sort of positive margin. So I guess you can boost your operating cash flow that way by booking some sort of deferred revenue. But if it's at zero margin, which I'm guessing Volkswagen got some sort of favorable term there to keep the company alive, at least, then yeah,
Could they
man,
could they boost?
it's
Could they market as 100% margin and just show like let's say next quarter the production deliveries were the exact same as this quarter? Could they flow that revenue? Could they throw that deferred revenue just through the revenue line at 100% margin and suddenly make it look like they actually have higher gross margin than what they truly do?
no, I don't think so. Because they're gonna have to recognize some sort of cost, obviously, with it. Um, I don't think so. Yeah, man, that's so crazy. Because like, think about it. So if they book some sort of 100%, you know, margin, Volkswagen will have to recognize it as 100% loss on their books. There's no free lunch, you know. So that wouldn't work.
Yeah, I was just trying to think of it if it was like similar to Tesla's example of like FSD deferred revenue or something like that. But in this
Right,
case, it's the bank of Volkswagen.
right, right. Man, they become a subsidiary of Volkswagen. That's so crazy. That's so funny. Hey, you never know. Maybe Volkswagen will buy them out. You never know.
Well, thanks for
Volkswagen has
looking
them.
at.
Yeah,
Yeah, thanks
sure,
for
of
looking into that. That
course.
was helpful.
Yeah, yeah. Stock is down 4%. $13 billion market cap company. What's their cash balance right now? 8 billion.
Yeah, maybe. I thought it was like 5 or 6, but you're probably right.
No, their short-term investments jumped. So you're probably just looking at cash and cash equivalents. But short-term investments is probably just T-bills. Anyway, okay. Anything else on macro front? So we talked, unemployment. What do you think about Hooters filing for bankruptcy?
Yeah, it's just a sign that I guess Trump needed to be elected because the Democrats didn't like to have any fun, and I don't know. I don't have any thoughts on it. Do you?
I mean, so this is, they have about 15,000 employees. And, you remember Park City all said about 15,000. I think they
I,
filed in December.
I was just going to
Uh,
ask you what your thoughts were on. I think last time we spoke, you were talking about Park City was going to. That was the domino that was going to tip over that would lead to recession.
I mean, it still could be, as you're saying. Um, it still could be the marker of the recession start, FYI. Because the initial week, like I am actually seeing, I know the initial weekly claims are still low, but I am actually seeing indications that initial weekly claims could be rising in the coming weeks. I don't know if they're going to reach a 300,000 level in the coming weeks, but they could actually be turning up here.
What are your sources for that?
I can't disclose, but they are not very deterministic things. These are, let's just say they are, let's just say they are,
Gut feels based on whatever Taco Bell you ate
no,
last
no,
night.
no, no, it's not gut feel. It's actually data. It's actually data. But so it's not survey, it is data, but it's kind of a mix between survey and data. Let's just say that. Okay.
Can I ask if this was from the same people that stripped out half of the inflation metrics and showed that if you remove almost everything from inflation, there is none?
No, 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 no. This is data that I've been working on. This is proprietary data. So this is meant to predict initial weekly claims.
Well, that's interesting because obviously weekly claims seems to be one of the most leading indicators. So we would know within what 6 weeks by the end of March if this was true or not.
Correct.
Okay.
We would. Exactly. Exactly right. Exactly right. Let's end on that note.
Sounds great.
All right. Thank you very much for coming up today. Lucci, go ahead.
Hey, Yaman, can I do a little bit of self-promotion?
Sure.
Yeah, so if you guys are interested in Intel, in 1.5 hours, there is Intel Weekly, a space that I host. And also, Yaman, if you are interested, well, there are quite a few people interested in Intel, and
I'm
I'm
sure there
actually
are.
surprised.
I'm sure there are. And I'm going to guess the average age is about 60.
Yes, true.
Yeah, exactly.
Yeah, man. By the way, you are welcome. Okay, if you want to know more about Intel, you're
Okay,
welcome.
when is your Intel Weekly?
Today in 1.5 hours.
So it's on Fridays at market close. Is that it?
Yeah.
Okay. On Fridays at market close, you couldn't have picked a worse time to host a weekly space. But if you're interested in learning more about Intel, go to follow Luce as a speaker. Is he a speaker right now? And join his. Are these recorded spaces? Can people listen to it later?
Yes, they can. They can.
Okay, cool. But if you want to be a speaker, if you want to experience a live, follow Luce and join his space Intel weekly spaces on Fridays at market close. Thanks, Luce. And thank you, everybody. I will chat with you all next time. Take care.